Investing in US stocks is becoming more and more available for Kiwis all around New Zealand. And in today's video, I'm going to be doing a comparison video between Hatch Invest and a new player in the market called Stake. We're going to be going through the pros and cons of these platforms and also the fee structures so you can actually understand what you will be paying in fees, whether you're using Hatch Invest or Stake. Now, before we get into it, if you guys haven't subscribed already, hit the subscribe button down below. Did you know 80% of you guys that watch my videos aren't subscribed? So make sure you hit the subscribe button so you can keep updated with the next video. So let's get into it. So let's find out who Hatch Invest and Stake are. So we'll start with Hatch here, and we can see that Hatch is established in 2018. It is owned by Kiwi Wealth Limited, which is a sister company of the Kiwi Bank and is part of the Kiwi Group. Hatch Invest offers 3,500 US investing opportunities, either through ETFs or companies. Now, as for Stake, Stake was launched in New Zealand in April 2020. However, they have been based from Sydney, so they are a Sydney, Australia-based company operating since 2017. Stake offer 3,700 US investing opportunities through ETFs and companies as well. They also emulate the offers of NeoBroker, Robinhood, offering 0% commission brokerage. So now we know the background of these platforms, let's have a look at what are the similarities between the two. So firstly, they only allow funding from New Zealand dollar bank accounts. So Hatch allows bank transfers, where Stake only allows poly transfer. Both access the US share market via Drive Wealth, and their protection is much the same. So if either of the platforms shut down, you will be given notice to sell up or transfer your shares to another US broker. Drive Wealth insolvency would mean your cash and securities flow back to you. Also, protections such as the Securities Investor Protection Corporation, so the SIPC, this allows your account to be insured up to $500,000 or with a max of $250,000 in cash. Moving on to the fee structure now, we've got a nice little table here comparing the two. So the deposit fee is 0.5% interbank rate, so with no minimum with Hatch. However, Stake Invest has a 1% interbank rate, so that's double what Hatch is, and they also have a $2 minimum fee. The withdrawal fee with Hatch is 0.5%, so excuse the dollar sign there, and that is interbank with no minimum. And then Stake is 1%, so again it's double with a $2 minimum, $10 withdrawal fee as well. As for the brokerage fee, Hatch Invest as of April, so literally only last month, they introduced a $3 flat fee, dropping it down from $8, and that is to buy up and sell up to 300 shares. Once you go past the 300 shares though, they do charge 1 cent per share additional. This also covers all order types, so whether you want to do market order, limit order, or even auto invest. As for Stake though, they do offer $0 market orders, so that's what attracts a lot of people to them, and then it's then tiered pricing via subscription, so all the way up to $19. So you guys can go check that out on their platform. They have a nice little fee structure there. You do, however, have to be part of one of these subscriptions in order to get access to the limit orders and stop loss orders. Now, as for customer support, with Hatch, you get unlimited free support. However, with Stake, only paid plans get priority support. And then the regulatory fee with Hatch, it's $0. So Hatch absorb this themselves. But with Stake, that SEC fee that I mentioned earlier, they charge 0.231 cents per $10,000 of sale proceeds, and then the TAF fee of 0.000119 per share. And then they have a transaction cap of $5.95. Lastly, the W8BEN form. So this is your US tax form, because you are trading within the United States, but you are living outside of the United States. You do need one of these forms in order to do so. So with Hatch, they charge a $1.50 fee at the very beginning, and then they'll charge 50 cents per year after that. As for Stake, they will be charging $5. Now, I would like to give credit to Money Hub. A lot of the information in this video was sourced from an article on their website, so I will leave a link down in the description below. And what you're actually about to see now is taken from their website, basically word for word. So quoted here, know this first, the fees charged by Hatch increase the more shares you trade. So after 300 shares, the fee, like I said earlier, is 1 cent per share. Our examples explain the costs in detail. We have excluded the SEC and TAF fee, which for most trades won't be more than a few cents. So moving down to the examples now, the first one here is if you trade JCPenney at 25 cents per share, a $600 trade buys you 2,400 shares. However, with Hatch, the trade fee is $24. That includes the $3 fee to begin with, plus the 2,100 shares additional that are over the 300 share mark that will be charged out at 1 cent per share. Now, if you sell them again for 25 cents a share, you'll incur another $24, but with stake, both of these trades would be free. And the second example now is if you trade Microsoft at $200 a share, a $600 trade buys 3 shares. With Hatch, the trade fee is $3. So if you sell them again for $200 a share, you'll incur another $3 fee. But with stake, again, both of these trades would be free. And lastly, if you take a $10,000 position in Zynga, you'll hold around 1,300 shares, and Hatch's trade fee would be $13. So that's the $3 fee to begin with, and then the 1,000 shares additional, so over the 300 share limit, were charged out at 1 cent per share. So then when you sell, you will pay again. And again, with stake, both of these would be free. And then number 4, if you take a $10,000 position in Facebook, you'll hold around 50 shares with them, and Hatch's trade fee would be $3 because, as I said, up to 300 shares is that flat rate of $3. And when you sell, you'll pay another $3. And again, stake, these trades would both be free. Now let's talk about stake's $0 brokerage. Okay, so it is a really big attraction for a lot of people to jump onto their platform, but let's really see how it weighs up when you're buying certain things. So the 1% fee can actually offset the benefits of the $0 brokerage fee depending on funding. So for example, if you are having larger deposits, so depositing say $1,000, you will actually get a higher fee or higher exchange fee from that. So yeah, like I said here, $1,000 you pay $3 extra via stake, and $10,000 you'll pay $30 extra and compared to Hatch Invest. However, if you are depositing small amounts, you will be charged that minimum $2 exchange fee. That's every time, so it's best to top up at least $200 at a time. And then the $0 commission on market orders can offset the extra exchange costs. An example, or in some cases, this depends on how much you deposit. So if you plan on trading regularly, then stake can actually work out cheaper. So let's have a look at both these platforms and who they might be good for in terms of investing habits. So with Hatch Invest, although you pay a $3 per trade fee, the exchange fee is half of what stake is. Free access to auto invest features allows passive investors to deposit small amounts and set a time frame at regular or automated intervals without paying fees. So as for the stake invest, you have to be on one of those subscription plans to have access to things like auto invest and limit orders. And who it is best for is for long-term investors who make regular deposits to trade a few times per month, or those who want to deposit large amounts at a time. So if you deposited $10,000, you would only be charged that 0.5% exchange fee compared to stake, where you'll get charged 1% fee. Moving on to stake. Now, although stake is fees free, they do have that 1% exchange fee on funding and withdrawing. This can also make up for their 0% commission because they do have those minimums as well. So remember, like I said, that $2 minimum. So as I was saying here, the $2 minimum fee as well as paid with the extra such as the SEC and the TAF fee. You'll also not receive interest or uninvested funds. Unlike Hatch, they actually take any uninvested funds and they'll put it into a market or a money market fund, they call it, and that pays dividends. And lastly, this is best for active investors who want more control and they actually want to have an ability to use an app, because with Stake Invest, they have an app, much the same like Robinhood. However, with Hatch Invest, they don't. However, it's pretty easy to use the Hatch Invest platform just on your phone, so it's all catered for either PC or mobile platforms. So in conclusion, if you're not quite sure which platform you would rather use, you can actually sign up to both of them because both of them are free to sign up to and use. Down in the description below, you will find links to these platforms. So we have the Hatch Invest link, where if you sign up, you will receive a $20 bonus. And then as for Stake Invest, if you sign up, you will receive a free stock either in GoPro, Nike, or Dropbox. However, these platforms are used primarily to trade in the US stock market. So if you would rather trade in the New Zealand stock market, I can recommend platforms like SHARESIES and Invest Now. And I'll leave a link down below to these ones. The SHARESIES link, however, will reward you guys with a $5 bonus when you sign up. However, that is all for today's stake versus hatch comparison video. I do hope you guys enjoyed it. I hope you learned something from it and maybe it swayed you a different way than the other. If it did, let me know in the comments below which platform you decided to go with. Was it stake? Was it hatch? Or maybe it was both? And of course, if you guys haven't subscribed already, hit the subscribe button down below. Don't forget to like the video and we'll see you guys in the next one.